Goldman's point is trade's really not pinching too hard, but they are looking for 5 more hikes. And in the end, they say this is actually a way to extend the lifespan of the recovery overall. What are your thoughts?
It's true. As Ben Bernanke said to us, and he said it publicly, that 2020 is a Wile E. Coyote moment. You know, the cartoon character that tends to fall off a cliff chasing a roadrunner. It's a Wile E. Coyote moment because a collision of the forces that Goldman Sachs is referring to, the lagged effect of monetary policy and more rate hikes to come, and of course the fiscal drag. Now this fiscal drag, meaning this year there's about a 5/10 boost to GDP from the fiscal side. Next year about the same, but then it drops off to a 4/10 drop, a negative impulse in 2020. It might get legislated away. It is an election year, but it probably will be a negative. It won't be as positive. So these things together will mean a slower economy, and it may be a good thing, as you said, Carl. We want to be like Australia, which has had an expansion, economic expansion since 1991, not likely. But it will be the longest expansion ever, dating back to at least since record-keeping began in the mid-1800s, at over 10 years next June.
I was going to say, and Kirk, I mean, the fact that it's been this long an expansion, and the fact that we've been a little bit on watch for the potential end of the cycle for some time, it does raise the question of whether everyone is kind of pre-positioning for that, whether it happens or not. In other words, a year ago at this time, global synchronized growth was the dominant story. And a year later, global synchronized slowdown is the dominant story. So does the market have it right?
I think the market has it right, and I think the credit markets hold the key. We've had very accommodative credit markets, and the credit markets are doing well. And I think as long as they are healthy, the stock market will do fine. Don't forget, you've got a lot of credit issues in China as well. So I think this is one of those markets where you have to watch the debt markets, watch the credit markets. But I think overall, to your point, I think that growth will slow, but I think that equities actually will surprise a little bit on the upside.